What happened with the trading of the micro futures contract, the MNQ? Well, we have seen it start off with the day. It looked like it was going to be a green day, and then it sold off pretty radically here. This is the day chart right here, 422, the green one in the middle. Previous day was a big red candle down, and this, when it was the strongest at the high peak, was way up here. It looked like it was going to keep going and maybe even engulf this previous red day. It looked very, very strong, very strong. You can see on the hourly chart right here that it was just kicking up, and we've seen days where the NASDAQ can just crazily reverse and go straight up or straight down, and who knows what it's going to do. So this thing, if it didn't correct here, I'd have been in big trouble for sure. We ended up losing about $200 on the day. So it was a down day, but it could have been a lot worse. Now, I did try to short because the whole thing was short. We have the daily chart, the 4-hour chart here, bearish, right? When the hourly chart was bearish before all this stuff started to take off, it was like this right here, looking very, very bearish. So I was I had a couple of trades where I went long, but then I said, what am I doing? And I started to short. Right when I did that, it went straight up. That's the kind of day it was. Let me show you what it looks like on the lower time charts. Real quick, the 15-minute chart here before the day happened. See, it sold off real sharp here in the beginning of the day. When the bell opened up and stuff, it chopped around. Then it just sold off, right? And then I was like trying to buy long here. I'm like, what am I doing? And right about here, I started to short. And that's the area that it just took off like that, right? And the big problem was not that it took off on me, not that I was on the wrong side. The big problem, which you'll see here in a minute, is that I added too fast, too much, too quickly, and it just kept going up. So there's a way of doing it, but I just, again, was unbalanced in my timing of the whole thing. Here is the 2000 tick chart, and we can go over this real quickly here. Pre-market had some buying, buy. I had a couple of good trades here, and then this third trade right here started to sell off. I was already long. That's what it was. I was already long in this trade right here, and then by the time it got way over here, let's say I closed when it popped up right here, I closed trade 3 for a tiny little profit, break-even profit. So all of this basically amounted to break-even. Now, I started to short right here with trade 4, right? I closed trade 4 for a profit. And then I did trade 5 right here. Trade 5 goes wrong. It starts to go up. Now, that's not a problem because in these areas right here are liquidity sweep areas to add to my position. And you can see when you do that, there's a chance that the liquidity sweep will reverse and come back down many times. But I added here, here, and here before it even did the liquidity sweep. So I was already adding way too much. I was already short 4 micros right here when I should have been short 4 micros up here. I should have added to my position after it came all the way up here to the first reasonable place to add. And then I would have had my average price right here with 2 micros. I was short 6 micros up here, right? And then if it went against me, it's only going against me with 2 micros instead of 6 micros. When it got to the next area, I could have added 2 more and had 4, and I would have had my average price way up high with only 4 micros instead of 10. And I would have had a much better time figuring things out. Now, yes, it did come down, and by the time it hit my break-even price, it was so close to the end of the day that I closed a little early and had a $200 loss. I could have had, probably a $500 win if I waited to the last minute, because you don't know if it's going to come down to break even all the way. So as soon as it got close enough to break even, I went ahead and closed my position. That's why we had a $200 loss. You might say, well, if you would have just held it, you don't know if it's going to bounce and rip back up to a $1,000 loss or not. You never know that. With only 20 minutes left, I'm not going to chance it. So I thought losing 200 was much better than losing. I was down about 1,200 up here. And again, I thought this time, if I was going with, the short side, what I'm learning is that, whether you jump on the right side or not, when price decides to turn around on you, that's where the struggle is. Even if you're on the right side for a while shorting, I thought for sure I was going to do okay shorting this thing. But when you're at the bottom and it's time for a reversal or a correction day, it doesn't matter. Again, you can still have a situation where, you've got to be careful how you balance your ads and how you position yourself and when you do those things. If you do it too fast, too soon, the strategy can hurt. So let's take a look at the overall results and see what we're doing. All right, here's today, Monday the 22nd. We had a drawdown of realized losses of about $500 when unrealized losses were closer to like $1,200, $1,300. But this is the realized losses that we came back in about $204 altogether. Take a look at the overall graph. It's still pretty high. These little losses we've been having the last couple of days have not really hurt the equity curve too much. But we gotta learn. We gotta keep learning. So now we have another red day. We have 3 red days this month. This was not. This is a zero trade. This is part of this day over here. So there was no losses on this day. It's just, I don't know why it's doing that. So we have about 4 days left of the month. Hopefully we can, not lose any more this month. We'll see how it goes. All right. We'll talk to you later. Peace.